Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, June 21st, 2013. Typically on Fridays, I'll go over the major markets we track for you at PerfectStockAlert.com, but I've actually already done that as of yesterday. It wasn't intended to be that way, but it's basically what I did. So if you want to watch, what I think about all the global markets, and to go watch yesterday's video. Today I just want to kind of highlight a couple of things that I'm noticing on a few different charts and what's interesting to me about them. So information that might be pertinent to you. And I'll go around the globe, but I probably won't hit them all, not all the charts. Like I said, yesterday I covered the short-term charts, and today I just want to show you some little details that are interesting to me and telling. First thing I want to point out, the Dow Jones Industrial Average, if you look at the Dow, S&P, the NASDAQ, basically anywhere on today's activity, you'll see a massive volume. Don't concern yourself with that. That is not what it would appear to be, simply because it's the third Friday of the month, and that's options expiration. Actually, options expiration is Saturday, but last day to trade will be Friday, and that's what that volume's all about, so don't concern yourself with it. This little move here is not important to me. It's not a hammer candlestick formation. Even if it were, it wouldn't be important at this particular point, because you have a breakdown, trends obviously moving down, and it would be a counter trend trade to try to buy here looking for an bounce, so I wouldn't be doing that. You can have a bounce in the markets, that's fine. We've been seeing a lot of fight in out of these markets for a while. You'll notice that we have, in the U.S. especially, our move has been much more muted than we've seen globally, so we have a couple of days to the downside, and a couple of days to the upside, a couple of days to the downside, so forth and so on. The down days obviously are larger than the up days, and that's the most important part. The overall trend is down. I'll stay with that trend. Now we're going to be looking at the Australia market, the AORD. In this particular chart, there is an interesting little development here. I noticed it yesterday, but I didn't mention it, didn't think it was all that important at the time, but now it's becoming more important. This is the previous support here and here, right? So let's just draw ourselves a little trend line right there. And let me show you something. Whenever you close below that trend line that was support here, 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 and here, is now going to be acting as resistance. And typically, you'll come up and test that and pull back away from that. And that's your confirmation. You got resistance, so forth and so on. That's where you get your entry opportunity on the sell side. However, in this particular instance, we didn't do that. Instead, what we saw was price activity came up, did not give us a shooting star, and then before touching it, reversed. Now that's fine. You can have situations like that. Very bearish conditions will often do that. However, we've pulled back down here and formed another hammer candlestick formation, giving you this signal right here. Which, so a lot of short-term traders would look at this going, well, we can come up here and take out the previous high. Well, all we're going to be doing in that scenario, if you did that kind of a bounce, we come up here and touching where you should have peaked at before on that previous support acting as resistance. So I wouldn't buy it, but if you get a move up here, you can easily get stopped out of your short position, and that's why I'm bringing to your attention here. What I would do in this environment, you got two choices. You can either take this stop loss limit that's right here and back it off over here to this previous shooting star, one right above that, 1 cent above that high, maybe about the 49.50 area, and then you get a move up here, you fail, and you start to go lower, and you stay with it. Another thing you might do is advance the stop. If she continues to move higher, fine, look for another entry opportunity on the short side. But just so you know, there's potential here for a bounce that might fool some people into thinking you've got some kind of a reversal here or something like that. It won't be that. This is support. It's now acting as resistance. Quick glance here at the Hong Kong Hang Seng Index. We're going to start looking at the shorter term chart. You can see that we've had a massive move to the downside here, completely eliminating any support that we had at this point. And you'll notice that we closed below that point, sold off, bounced again, didn't have to it, and rolled over and continued to go lower. There's nothing here that would indicate a buying opportunity. There's no hammer candlestick formation here. There's nothing here. You can still see bounces along the way. That's fine. But the overall trend is substantially lower. And if you look at the longer term chart, you'll understand why. Okay, this is the 2-year weekly chart of the Hong Kong Hang Seng Index, and you can see the very bearish condition here. This is the support line that you were bouncing on since way back in 2011. So you got support here, 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 and then this time around you close below it. That means that's now going to be acting as resistance, and we got this little line there. You also notice that we used to find support right here on these moving averages, 50 period and 20 period, and then now you're not. So that's going to be providing resistance as well here and here. And then you've also got the previous support that was, you can draw it here or off here, but either way, this is previous support now acting as resistance. That's going to be there as well. So any bounce that you would get after 6 consecutive weeks at downside, you would expect a bounce at some point, but any bounce that you get is going to have to deal with that kind of pressure here. So there's not a lot of upside here, and we're going to be moving lower. Again, look at the candlestick formation. It's a continuation signal to the downside. Again, I'll be looking for a test of these lows in this area here, which puts us down here at the 18.5 level. You got a lot further to fall still. Quick glance here at the Japan iShares at EWJ. You can see that we have reversed today's, on yesterday's activity, we had a massive move to the downside, closing below this little uptrending line here. We've done that once before, and then we quickly jumped back up inside there and played for a little while. You notice we went a little bit higher, formed the shooting star, sell signal, and then we got confirmation, and then we broke down. Now we jumped back up as though we're going to hold it, but actually all we're seeing is resistance at the previous support line here. This is a hanging man candlestick formation. It's a sell signal as well. If you look at the longer term Nikkei chart, you'll understand this chart a lot better. Okay, this is the Tokyo Nikkei, and you can see on this longer-term 2-year weekly chart that all we've actually done here is broke that support line we talked about before you had going on for a while, and then we bounced up to it and found resistance, and we just moving down away from it. This is the resistance line now. What's support? It's going to be resistance. Any bounce will be short-lived, and again, no hammer candlestick formation off the low. We're going lower. Simply measure this distance out here. This is the measured move, temporary situation, and then you duplicate this massive move here out the other side. I'll put you down here roughly at this area, which would make a lot of sense being previous resistance would be acting to support that level as well. So that's where I'd be looking for some kind of a support area. Looking now at the FTSE, the London Financial Times Index. This one we talked about yesterday was a sell, and then again, this is probably one of the most bearish charts I can find. Obviously, there's China, and that's going really quickly to the downside and everything, but that's obviously pretty clear for many reasons. But this one here is the one that I think has got the best potential on the sell side, and the reason would be what's happening with everybody else. You see the end of the QE, or it's at least being discussed on different fronts, and I don't think you have any way of changing that. A lot of bulls out there are thinking that any minute now the Fed's going to step up and say, "Never mind, I was just kidding. We're going to start QE all over again, or we're going to double to what we used to do." Or what? It's just not going to happen. The reason being the interest rates. And so when interest rates rise, the question is it something that is happening in anticipation of the Fed's activity, or is it something that's just happening despite the Fed's activity that they're currently doing? And so it would suggest that the Fed is losing control of the market. I would go with that. I would believe that the Fed is losing control of the market because the interest rates started to rise ahead of the announcement by the Fed that they would start to slow down their easing. So that's why I would prefer that theory. And in this particular chart here, I have to remind you that when you have interest rates rising, whether it's in Japan, which is seeing that massive sell-off in their markets, or where you have interest rates rising here, and now you had the Fed come out and talking about tapering, and we've seen a bit of a pullback here in the U.S. But if you look around the globe, you'll see interest rates rising, and that's going to hurt Europe. That's the problem this thing has been trying to pretend doesn't exist throughout this entire period, and it keeps coming back. Well, whenever interest rates rise, these different governments around the world, they have to go out and they float bonds to try to raise money, right? That's how it works. If your interest rates get too high, then they can't afford it, and that puts pressure on them. So that's something that I really think that is important to this market right now, and you should be watching for some kind of headlines talking about rising interest rates, bond rates in Germany, and things of that nature. Start watching for that news because it'll start to happen, and that'll be pressure further to the downside in the markets. Main thing here, looking at the FTSE, you can see you've got a massive sell signal at the 200 period moving average. This is very, very bearish. It's telling you have a bear market that's forming here. You're getting a sell signal. When you should be finding support here, you're not. In the bull market, even if you slip below the 200 period moving average, you typically find support at the, if you slip below the 50, I should say, you find support at the 200. In this case, you're not doing that. You're getting a massive sell signal here. So again, very troubling for global markets when you see that kind of stuff. And again, when you know what's causing the problem, when you see that interest rates are rising, that's going to affect them again. It's going to put us all right back where we were. Then you can see why this would be a great sell. All right, quick glance here at the VIX, the volatility index. I covered this in pretty good detail yesterday, so I'm not going to go all into it. Basic overall story here, you've got a very bullish pattern on the VIX, which would be bearish for the S&P 500. You can see that we just have a cup and handle formation going on here. We've broken out of that pattern. You do have a massive gap, nice size gap I should say, right here. I would be a buyer of that fill. We had talked about this one before, and anybody took advantage of that when it filled, made good money in that in just a matter of days. Watch this again. If you get another pullback, something like that, and you might see the markets bounce for a couple of days while that happened, that's fine. Use that as an opportunity to get involved on the long side there. Remember, these lines here, the 50 period and the 200 period, are preparing to cross. That's a bullish cross, and whenever you have them in that particular fashion, it's telling you that you have a bull market is forming here. That makes a lot of sense for the VIX, but it's also the exact opposite for the S&P. You should be looking for the S&P to show that bearish cross, where the death cross, where you have the 50 crossing below the 200, not above it. Okay, and so that's what I see. All the opportunities that I see out there. Take yesterday's video and today's together, and you get a good idea what I'm looking at for next week. If you've not been to the free website at perfectstockalert.com, it is right there. It's 100% free, and all we ask in return, please refer a friend. I'm contemplating doing another series of videos throughout the week that will be more trade opportunities to pull from the market. So I will be thinking about that over the weekend. If I decide to do it, they will only be on the website. They will not be available on anywhere else. So it'll be here, and then from that point, if you guys are interested in checking those videos out, you'll have to go to the website for those, okay? I'm still thinking about it. I don't know whether I'll actually do it or not, but it's something to think about. Enjoy your weekend and be safe, and I will see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.